One of the easiest ways to get your credit score higher is to basically use non-traditional data in order to actually like boost up that score for you. And what exactly does that mean? And actually, let me take a little quick step back. America's financial system is very, very old and outdated. And what I mean is that going all the way back to, the early days, let's call it 1775, the financial system is kind of based on one principle: having a banking relationship, institution that basically has a collection of the community's money that allows the community to withdraw, take out loans, and make future purchases with the collection of the benefit of everyone else, right? So it's traditionally only through banks and having relationships with the institutions. Now, that is quite efficient in today's world relative to like pretty much any other country. I wouldn't say every single country. There are some countries that actually do have better financial systems than we do and newer financial systems. However, coming back to America, the new companies that are coming up, the new financial tech company, the new financial tech companies, some say fintech, those companies are coming up with alternative ways for individuals to have a credit score. So think of folks like, high school or folks that just recently graduated college or people that may have been incarcerated. Those folks that just generally speaking have not had access to having relationships with banks, right? They typically either work jobs that pay over the counter or excuse me under the counter, right? So just straight cash, or they don't have any student loans because they didn't go to college, or maybe they never even got a banking account. They never got a loan from a bank to borrow to purchase a car or purchase a home. They went to a check cash in place or a pawn shop, whatever the case may be. But essentially, what these fintech companies are doing is leveraging different data points, such as, for instance, like your bank account, and seeing all the, you know, account history. And when I say bank account, it doesn't necessarily have to be your bank. So, for instance, a firm called Built, they basically take all of your rent data, any rent that you pay, which again goes to not your bank, but the institution's bank that collects it. They can extract the data, map it back to you, and say, okay, they pay the rent every single month on time. That is credits credit worthy data, right? Or you can look at reoccurring payment history. Again, it has to go through the opposite end institutional bank, but again, they can map it back to you, right? Use an identifier. So seeing, okay, you pay Spotify or Apple Music or whatever subscription they have, such as maybe like your gym, and they see that it's reoccurring and you pay it every single month. That means that you, when you have a credit card or whatever kind of loan facility that you get, you would pay that back every single month. And likewise with, any kind of like bills that you have, right? The next one is what is out there in public, and this is a bit controversial, but again, it is a data point that some new fintechs are using, is what you post on your social media platforms. And think of social media not just like your Instagram and TikToks, but think of like your LinkedIn, where you have, certificates out there. You may have taken an AI course, you may have taken some type of financial course that deems you worthy to sell insurance or deems you worthy to sell some type of investment products. Or you may have got, I don't know, some type of medical degree, or you may be a doctor because you graduated from, your PhD program, right? It really depends. But those habits are good habits, right? You can align those habits with basically practices of worthiness, right? Like not just worthiness, I shouldn't say that, but basically like you have a way of getting things done. You went 4 years for that course, you went 4 years for that program, you graduated, that's healthy, right? Very similar to like how that will pair to like payments in the future. There are also like public records out there as well too, such as like property ownership. You may have not actually, borrowed money from the bank to get a loan, but you may have got passed down a home, or you may have got passed down some type of asset, right? And if there's, public record of that, they want to take that into account because now they know that you're maintaining some type of property out there. You could be maintaining a house, you could be maintaining, an apartment. It doesn't really matter. But the point is that you're doing something reoccurring, and that's essentially what a credit score is that you have the same exact habits every single month, and they're not going to change, and that essentially decreases the risk to the financial institution that issues out the credit card. So the newer companies called fintechs or financial technology firms, what they're doing is they're taking this alternative data from public sources or the vendors that you currently do business with, and just reverse engineering it back to you, so therefore they can deem you worthy for a credit score, because the typical or traditional financial system does not allow that to happen.